And welcome to this week's Halftime Talk. We're honored to be joined by Dr. Ahmed Attiga, Chief Executive Officer of the Arab Petroleum Investments Corporation, known to many as APICOR. Dr. Ahmed, welcome to Halftime Talk.
Welcome, Sean. Great to be with you. Thank you very much for having me.
Halftime Talk is a moment where every week we take a slightly deeper dive into some of the trends that are impacting the global energy markets. And there's none more so than the engine room of capital. How does APICOR see the sort of energy investment profile 6 months into COVID? Clearly, there's been a massive impact in CapEx reduction across the energy value chain, whether it be fossil fuels, renewables, everybody's taken a big hit. How do you guys see it now 6 months in?
Yes, as a matter of fact, it's beyond only the COVID crisis. We coined the term triple crisis to describe what has happened over the last 6-7 months of 2020, which is a health crisis of unprecedented proportions, an oil price shock that also has reached unprecedented levels, and the financial and economic slowdowns that have resulted from the first two crises. So it is a complex set of circumstances that have suddenly hit like a perfect storm. And
as we're talking today, it's the day in which marking, sadly, 1 million dead with the COVID pandemic.
Exactly, and the so-called second wave and third wave will continue. So the energy sector has definitely seen the huge impact of this multiple crises on all aspects of it: the demand of energy, the supply of energy, and of course the investments. On the investment side, APICORP issues an annual investment outlook in the energy sector. And we just issued the 2020 numbers, which showed that in the MENA region for the next 5 years, we expect a reduction in the capital investments for both conventional and non-conventional projects from almost $1 trillion in our last estimate to close to 800 billion for the next 5 years. Not a small reduction.
Just for the MENA region?
Yes, we're talking about the MENA region now. Not a small reduction, and one that requires all financial institutions of every size and kind to really work together to bridge this financing gap, both for the public sector and the private sector.
Is it not a case, Dr. Ahmed, where given what is alongside that $1 trillion that was previously forecast to be spent over the 5 years, 20 to 25, I presume, but now there's less demand for that same amount of oil or whatever energy product you might be talking about?
Exactly. The oil market's demand has significantly come down. I think we have an oversupply now of plus 2 million barrels per day from the 2019 projections. During the second quarter of 2020, the oversupply reached a historic all-time peak of about 12 million barrels per day, causing really great disruptions in the energy markets globally. And the prices, of course, have shut down considerably, as we all know. So the markets are still trying to adjust and to recover. We don't know what the length of the pandemic will be, what would be the impact of the lockdown policies that most countries have taken, the pace of recovery, the elasticity of demand, and I must say the OPEC Plus resilience, if you will, are all factors that are still that still have a great degree of uncertainty.
If you look at that $800 billion of investment that you're saying it's dropped from 1 million to 800, so there's a gap of 200 billion.
Yes.
Whether the 800 or the 200 gap, are we looking at a situation where new players will need to come into the financing that didn't have to, that weren't there before? How do you see that?
Yes, definitely. As I just mentioned, there has to be a new way of financing the energy sector. We called it in a recent paper we issued the new renaissance, which is basically new partners, new financial partners playing a different role. And if I would give an example here is the role of somebody like Apicorp, a multilateral financial institution, along with other multilaterals that in situations and crises like this have to play what we also described as a counter-cyclical approach, an approach where you come in, you take more risks, you provide funding for both public and private sector entities that otherwise would not be available. That requires also mobilization, meaning no one entity can do it alone. So the mobilization of additional funding from the likes of multilaterals, the likes of sovereign wealth funds becomes very important. And we in Apicorp have started to play this role, albeit we are a small institution, and we need others to come with us. Another form of financing is on the equity side, on the investment side, what we also labeled as patient capital. This crisis presents opportunities for assets that may be undervalued because of the crisis, but not as a result of the potential that the sector where they operate has. So you come in, you take an equity stake at a discount value, and you become patient with it, meaning you keep it for the longer term as an investment until the role is satisfied and that company or that entity or that project manages to come back again in 3, 4, 5 years, where the investor will reap the returns, and at the same time the sector will recover.
We've seen in recent times, Dr. Ahmed, a big increase in debt financing in the MENA region, particularly in the Gulf region, which previously in decades past were not part of the debt markets, didn't issue bonds. Now it's increasingly becoming a first stop to bridge fiscal deficits, etc. How do you see the future of debt financing in the context of the somewhat wealthy Gulf energy industry?
Definitely, and we have seen more of it in 2020, where sovereign and sub-sovereign entities in the region, particularly in the GCC, needed to go to the markets for debt, to raise debt through bonds and sukuks and other instruments. This is a new phenomenon, and some of these countries have even gone to the market at a much higher prices for their papers that they usually get. Again, it was a combination of need and to have also long-term funding that they can then utilize for their needs, be it in their own countries or through their financial institutions. So yes, we have seen that. Apicorp itself has gone out to the market in last June, and we issued a paper that was exceptionally priced in terms of the cost of funding, and we will use that funding for the counter-cyclical approach that I have role that I have described. So yes, we have seen the debt capital markets being very active, and this is good news because it means that
we would imagine that's likely to become the principal pillar when the Fed have indicated basically free money for the next 5 years? Where else would you go?
You know, exactly. So there will be a competition actually for investors who will buy these papers, particularly from the sovereign entities. We have seen national oil companies going to the market even before COVID. ADNOC and Aramco have gone out to the market. Aramco has done an IPO altogether. That was a few years ago unheard of. So I think the crisis will only accelerate these financial products availability and also role in securing the required funding for the sector.
The other thing we've seen at this time, which may put more sort of stress, if you like, or obligation, is that the major oil companies, as they've been known historically as the oil majors, BP and Shell and Exxon and so forth, they are slowly and in some cases quickly retreating from fossil fuels, and particularly from oil exploration, which you would imagine will put greater opportunity, but also obligation on the national oil companies to build that gap and to make up that space where the majors are retreating from. There'll be a lot of money needed for that. And I'm wondering, how concerned would you be that the international investors might turn away from fossil fuels at a time when this gap is appearing?
Yeah, certainly the IOCs have started to show some pattern of behaviors, particularly on the exploration side, that is consistent probably with their own priorities and with their own strategies, particularly given the countries that they belong to. However, fossil fuel will remain a major ingredient of the energy mix, and the challenge is to how to make it more quote unquote sustainable, more green, more low cost, more low carbon, and integrated with the energy mix of non-conventional and other sources of energy in a manner that ensures the balance. Countries in the region who rely on oil have started long before this crisis showing how they want to strike this balance. And you take ADNOC, you take Aramco, you take other countries in the region, both, for example, exporters and importers of energy. So we in APICORP advocate that the energy transition should strike this balance. The last, as we always remind everyone, the last barrel of oil will be from this region. And that requires to have a sustainable and a long-term plan for investing in fossil fuel. However, bringing the right technologies, bringing the right sustainability elements to it, and of course, secure the required financing. So the
yeah, go ahead, sorry.
The NOCs of this region, particularly the bigger ones, I think have started to show how this balance is to be struck.
APICOR in the past has been focused in the area, obviously, and hence its name, in petroleum, and also in a region, in the MENA region, where there are many countries that have a variety of different needs. But the Gulf states were always seen, as the major oil producers, to be pretty self-sufficient when it came to the need of financing. I'm wondering, how do you see the region changing now through COVID? Countries like Oman are under fiscal stress in a way that they haven't been in the past. Others, even the Kingdom of Saudi Arabia is going to be facing challenges. How do you see the Gulf states change by this window of time?
Well, the Gulf states, first of all, are not homogeneous in terms of their resource abundance. So you have Bahrain and Oman, who have always went to the markets and received also funding, particularly for their larger projects in the energy sector. The fiscal space in all of these countries, particularly in 2020, is facing a serious constraints. I think that will continue in the near future, and that required these countries to put plans that could provide the necessary funding, which not only does not rely on government spending, and we have seen even the vision plans that each country has designed for the medium and longer term, basically emphasize that the funding has to be mixed, has to rely on public-private partnerships, particularly in having financial schemes that support public-private partnership, and in going to the international markets. So I only think that this tendency will be accelerated by the COVID-19 crisis and all its related implications. Meaning,
you mentioned that the multilateral agencies should be coming to the table more going forward. They have generally taken the view in the past that the Gulf is not a market for the IFC, for the World Bank. I'm wondering, in your opinion, do these multilateral agencies have to revisit their policies about this?
Well, every multilateral has its own mandate and its own set of parameters that it operates within. For example, you mentioned the World Bank and the IFC. At the end of the day, the overarching mandate for these institutions is poverty alleviation, either through the private sector like IFC, or through the public sector like the World Bank. So in this context, the Gulf countries, being higher income countries, don't fit the requirement of direct financing, and that's why these institutions are not active in the GCC countries. But other multilaterals have different mandates, and supporting their member countries includes supporting the Gulf, the GCC economies, both public and private sectors. And APICORP is one example of that, where we finance our member countries. And increasingly, we have started to look at the private sector in these member countries. Financing also doesn't mean that you only do business in these countries, but you can help investors from these countries go outside. For example, we have UAE and Saudi investors who have gone to Africa, sub-Saharan Africa, for power generation. You support these investors either through debt or equity financing. You bring other investors from other parts of the world to our member countries as well, and we have done so as APICORP in many cases. So.
I mean, my question, I suppose, on the multilateral agencies like an IFC World Bank, given the remittances that come out of the Gulf to countries that the IFC and the World Bank would be, by India, Philippines, Africa, Lebanon. I mean, there is a huge impact this year on remittances to all of these countries, that from the point of view of a holistic approach to investment from the likes of an IFC World Bank, would it not be in the thinking that there is a 1 and 1 is 2 there?
I doubt that the World Bank and the IFC will change their policy constraints in terms of funding higher income countries. That's a policy decision that is to their shareholders to decide on.
Yeah.
However, these institutions engages with higher income countries in advisory services, public-private partnership, transaction advisory, etc. But I doubt you will see any change in their policies towards the higher income countries as they classify them. Other multilaterals, either in the region or globally, you have the OPEC Fund for International Development. You have even the Asian Development Bank, the African Development Bank, and the Arab multilaterals are engaged since inception in supporting the member countries, be it the higher income or the lower ones.
Well, it'll certainly be interesting to see how significant a player China becomes in this market, because ultimately they're quite keen to deploy capital here into big infrastructural projects. Let's just talk a little bit about...
Actually, China is taking a leading role, both bilaterally and through multilaterals that China is a member of. And I'm sure you have heard of the Asian Infrastructure Investment Bank, AIIB, that was created, headquartered in Beijing. China plays a key role through that multilateral in supporting their member states, which are basically in Asia and outside.
Talk a little bit, Dr. Ahmed, about patient capital. How does it feature in Apicor's work?
Apicorp, one of its financing products is equity. So we evaluate potential investments based on their viability, based on their upside in the future, and we invest as equity investors. We are one of the few multilaterals that invests through equity in the region, and even globally. Equity investment is a very tricky asset class. It requires you go in and you play a role in taking that investment or that company to the next level, operationally, financially, governance-wise, etc. Patient capital, which we very much advocate, is to detect opportunities that this crisis has presented in terms of valuation. So the company or the project is very viable and has a potential. However, its valuation has come down because of the crisis. So the opportunity to buy the asset at a discount is much higher. And that's where you go in, taking advantage of the asset valuation, but you stay. That's where the word patient is coming from. You stay because you have a role. You don't want to quickly exit only because you can make money, but rather stay with that sector or with that company and play the role of taking it to the next level, and then exit when your role has been satisfied.
Like a private equity position.
It's a private equity, but in a patient manner. Private equity proper, they exit in 3 to 5 years, because exiting and making money quickly is one of its main features. But multilaterals who do equity should have a much longer term, again, patient approach.
Given the current period, you have put together a $500 million package for the COVID-19. Does it fit into that patient model, and where are you deploying it?
Yes, the 500 million envelope for counter-cyclical includes debt and equity financing. We have started to deploy it in a number of projects in the region. Again, mostly the demand for this money is to satisfy working capital needs, liquidity needs, trade finance flows, and investments that needs capital, and in this case, investment capital, and we apply the patient capital approach that I just described. So we have done a project in Jordan in the wind power. We have done a project even in the private sector at the SME level, in solar energy in the UAE, for example, where smaller firms are becoming very attractive for equity investment that will allow them to play a much bigger role in the energy transition of these countries. In this case, solar energy, starting in the UAE and going to other places in the region. So we are going to continue to deploy capital both through debt and through equity in 2021 that satisfies this countercyclical mandate that we firmly believe we have to play in periods of crises.
When you look at the energy transition, Dr. Ahmed, and through this period, obviously it had been a change that was underway in the region, and particularly UAE more than elsewhere, pockets in Jordan, as you suggest. My question is, has the COVID crisis accelerated the change, the energy transition journey, or has it acted as a stumbling block? How do you see that playing out?
No, I think it's still probably early to empirically measure your question. However, as I said in a previous media interview I had, I think it only accelerated it, or it will accelerate it probably because these countries have realized that diversifying their economies becomes really an indispensable objective. Countries like the UAE, like Saudi Arabia, like Jordan, like Egypt, like Morocco, in the MENA region, have started on that front quite steadily. For example, Jordan had the largest utility scale wind power. The UAE is a host to the largest solar energy project in this region. And I think the crisis of 2020 and beyond will only solidify the plans for diversifying the economies and diversifying the energy mix. So I don't expect to see any drawing back from that strategic objective, but rather acceleration. However, financing will be a constraint, as we just discussed, and the various financing schemes and options have to be deployed to overcome this challenge.
Just to wrap up, Dr. Ahmed, on that challenge, we've seen many regions in the world that have the ability have done massive stimulus programs. In this region, we seem to have gone more down the austerity route rather than the stimulus route. I'm wondering what your opinion is on that, and what are the consequences of those choices?
Well, I think that's a correct description. When you are hit with a crisis, you quickly try to tighten the belt, and spending in some of the regions, in some of countries of the region, before the collapse of the oil prices, starting from 2014, was on the very high side. So a tightening of the belt becomes important. Some of these countries don't have actually what it takes to have the stimulus programs similar to what has happened in other much more advanced economies. So it's really one has to put it in the perspective of what is the resources available for any given economy, and how can they do it. However, even with some funding constraints, countries in the region, even a small country like Bahrain, where I am sitting, has done quite a bit in terms of subsidies and stimulus packages, particularly at the household level, that could help their economies and their societies weather the immediate impact of the storm. Longer term, however, I think you will only see more conservative fiscal approaches.
Yeah, well, we'll see how that plays out. I mean, maybe everywhere eventually we'll have to do austerity because somebody has to pay for all of this stimulus, and perhaps the taxpayers in Europe and America and elsewhere will be hit pretty hard. Exactly. We probably have to wrap it up there. Dr. Ahmed Attiga, thank you so much for being on Halftime Talk this week. This is a subject that will clearly go on as we move into 2021. And we look forward to the opportunity to revisit with you and take your insights as the year comes ahead. Thank you so much.
Thank you very much, Sean. I appreciate having me, and I look forward to future discussions with you and your teams. Thanks a lot.